Gold's price has shown some slight bullish tendencies yesterday and during today's Asian session, but there is still no clear or convincing upwards momentum. In today's report, we intend to have a look at the upcoming release of the US inflation report for November, China's intentions and geopolitical issues in the Middle East, all on a fundamental level for the gold market. For a rounder view, we conclude the report with a technical analysis of gold's daily chart. The release of the November US inflation report may create substantial volatility for gold's price. Please note that for the time being, the headline rate is expected to tick up and the call rate to remain unchanged at relatively high levels, both on a year-on-year level. Should the actual rates meet their respective forecasts, we may see the Fed's stance turning more hawkish, given also the strong US employment report for the same month. Should we see the US CPI rates showing a persistence or even an acceleration of inflationary pressures in the US economy, we may see the release weighing on gold's price and vice versa. Please also note that we believe the negative correlation between gold and dollar, as well as with US yields, has been disrupted since our last report. Media highlighted in the past few days China's gold buying spree. According to media, the People's Bank of China on Saturday said it bought 160,000 fine troy ounces in November, ending a 6-month pause in purchases. The People's Bank of China had been a major buyer of bullion since late 2022. The news took the markets by surprise, as a possible renewal of China's interest in gold buying could alter fundamentally the gold market, as another issue that has to be factored in any prognosis about gold's price, with possibly bullish repercussions for gold's price should the PBOC continue buying. In the Middle East, we mark the end of an era as the Assad regime in Syria fell after substantial pressures from various rebel groups and Israel. Former President Assad has fled the country and is now in Russia, which has given political asylum. The situation in Syria as such remains highly fluid, as no faction seems to be having the upper hand clearly throughout the country. At the same time, Israel's Air Force is pounding positions in Syria, with more than 200 attacks being made. For the time being, we see the case for instability in Syria to be enhanced, which in turn could support gold's price by creating safe haven inflows for the shiny metal. On the flip side, should we see the situation slowly stabilizing, we may see such easing of market worries weighing on gold's price. On a technical level, gold's price edged higher, yet its bullish tendencies seem to remain unconvincing for now, as the precious metals price continues to be moving in a sideways fashion within the same boundaries since the 25th of November. We maintain our bias for the sideways motion to continue for the time being, and note that the RSI has risen above the reading of 50, yet remained close by, and at the same time note that the Bollinger Bands have narrowed, reflecting the lower volatility of the price action, which in turn may allow the sideways motion to continue. We note that the slight upward movement yesterday and today, yet for a bullish outlook we would require a clear break above the 2,685 resistance line, with the next possible target for the bulls being the 2,790 resistance ceiling, which is also a record high level for the shiny metal. Even higher, we note the 2,900 as a possible target for gold bulls should the bullion's price enter uncharted waters. Lastly, for a bearish outlook, we would require a clear break below the 2,600 support line and the precious metals price to start aiming actively for the 2,475 support base. In an extremely bearish scenario, we may see the pair aiming for the 2,350 support hurdle, which has not seen any price action since July. Thank you for joining us today as we navigated through the dynamic world of financial news. From all of us here at IronFX, we wish you a solid trading.